Alright, let's get started then. First question we've got from the semester 2 2014 exam is that City Road operates a number of clothing stores in Melbourne. Selected of the City Road Limited and their selected accounts of City Road Limited and their balances as at the 30th of June 2014. So it's the end of their financial year, are provided below, and we've been given a list of some balances. Not a balance sheet, it's not an income statement, but it's just some account balances. It says there's some additional information here. We've got some profit for the year, and that was $86,750. The market value less cost of sales in inventory is $71,500. City Road has decided to transfer $55,000 from its retained earnings to its general reserves on the 30th of June. The company has also declared a final dividend of 20 cents per share. Now it says here, prepare a fully classified liabilities and equity section of the Statement of Financial Position. So the two chapters that we did for liabilities and equity, I think were chapters 9 and 10, or was it 10 and 11? No, I think it's 9 and 10. So we're assessing liabilities, your knowledge around liabilities and equity. And I thought this question was really easy. So, because liabilities, what's the normal balance for liabilities? Credit. What's the normal balance for my equity? Credit, yeah. So we're just really looking at the items that are on this side here. We've been given a few other items, but they're obviously not liabilities or equity, or are they? Let's have a look. What would I normally classify my long-term bank loans? Now, when I talk about classifying, I'm talking about current assets, current liabilities, non-current assets, non-current liabilities, equity, and then I've got income and expenses as well. Whoops, you can't see that. There you go. So that's what I'm going to try and classify these into. So let's go down, and what do I normally classify my long-term bank loan as? Non-current liability. What about accounts payable? Yep, current liability. Accounts receivable? Current assets. Interim dividends. Equity, yep. And a dividend reduces equity, so therefore you got your debit balance. What about a dividend payable? No, not quite equity. It's this key word here is payable. And that'll be a current liability. Cash at bank. Current assets. Share capital. Share capital, yeah, I heard someone say equity, yep, good. Inventory. Current assets. Equipment at cost. Yeah, non-current asset. Revenue received in advance. Current liability, yes, we owe someone something. General reserves was equity. Provision for long service leave. Ooh, this is a toughie. This is a non-current liability. Long service, non-current. Okay? And retained earnings, just the opening balance. Yeah, equity, that's right. So now I've made my classifications. What I can straight away exclude is this one, cash at bank. Where was my inventory? That was another one. I can exclude that, and I can exclude my equipment as well, because they're all the non-current assets. Oh, there's an accounts receivable. Get rid of that one as well. So really I'm looking at the other items that are there. And it says, prepare a fully classified liabilities and equity section. Now, this question is to help you determine, you want to try and determine equity, because there's some additional information here like profits, which goes into equity. This is the market value less cost to sell inventory. Well, we're not valuing inventory at the moment, so that one we don't need to include. City Road has decided to transfer it from retained earnings to reserves, some amount, and it has declared a final dividend of 20 cents. So there's a final dividend there that we need to put into our retained earnings as well. So firstly I'm going to rebuild my retained earnings account. Okay? Now, IDT accounts. You could do this as a running balance if you wanted to. Now, my opening balance of retained earnings was how much? 270,000. No, not 270,000, 200,700. Harder to say. Now, because it tells me it's credit, I'm putting it on my credit side here. So, opening balance. What have I got? 200? 200,700. Now, it tells me that was the opening balance of this date. We've got a interim dividend of 15,000, and we've got a dividend payable of 15,000. So they're both going to reduce my interim dividend, both going to reduce my retained earnings. And my interim dividend must have been paid. And final dividend. Oh no, dividend payable. No, that's right, sorry. Whoops. And how much is my final dividend? Does anyone know? It's 20 cents per share. How many shares do I have? Okay. Got 150,000 shares here. So if I'm calculating my 20 cents per share, equals how much? How much? 30,000. So I've got final dividend of 30,000. Okay, so I can tick that one off. So I can tick off this. It says we're going to transfer 55,000 from retained earnings to general reserve, so I'm going to put in 55,000 here. And I'll put general reserve. And I can change my amount here to include 55,000, which will make it 109,800. And I'll just highlight that amount there. All right. What else do I put into my retained earnings? What else goes in retained earnings? One more thing goes into retained earnings, which is my profit. So profit increases retained earnings, 86,750. Any other items that you think might go in there? No, I agree. So, how much then is my retained earnings account? Can someone do some calculations for me? Add these two together. 86, 87, 450. 287, 450. What have we got here? 55, 85, 90, 100. So that makes 287, 450. So my closing balance is 187,450. Now this is the balance I'm going to use in my statement. So it's a calculation that I need to do before I actually start working on my solution. Okay, everyone okay to this point?